Howdy, everybody. Welcome to Liberty Call. Today is Tuesday, February 25th, 2025. Hope you're having a fantastical day out there in the interwebs. Boy, my beard is all messy today. I apologize for those who are watching and not listening. Anyways, all right. Well, hope you're having a fantastical day. It is a very nice day here in Colorado. Warm temperatures. I think it's in the 60s outside, which feels very, very nice. And I got a ribs on the smoker. I smell like a barbecue restaurant right now from tending that a few times already today. So anyways, all right. Well, markets are mixed as the Dow edges up, but the S&P and NASDAQ slip, weighed down by a sharp drop in consumer confidence and inflation concerns tied to Trump's latest tariffs on Canada and Mexico. Treasury yields are falling as investors seek safety while NVIDIA is slipping ahead of its earnings report. Meanwhile, Bitcoin has plunged below $90,000 a coin, dragging down stocks like Coinbase and Robinhood. So before we break all the news and all the good stuff down, if you could do me a favor, give me some thumbs up, a like, share, subscribe, follow, and press the notification bell. All righty, well, let's hop into the markets for today. Dow Jones was up 0.37%, 160 points, closed at 43,621. S&P 500 down 0.46, 27 points, closed at 59.55. NASDAQ down 1.35%, 260 points, closed at 19,026. VIX today was up 2.74%. It's at 1950. Canada up 0.21. Brazil up 0.55. And Mexico down 1.17%. Headed to Europe. Germany was down 0.13. The UK up 0.11. France down 0.49. Netherlands down 0.5%. Spain up 0.8. Italy up 0.63. Switzerland up 0.47. And Portugal up 1.47. Russian exchanges, both green today. MOEX up 0.51, RTSI up 2.34%. And the overnight markets, the Nikkei in Japan was down 1.44, Australia down 0.68, New Zealand down 1.76. In China, the Shanghai was down 0.8, Shenzhen Component down 1.17, China A50 down 1.14, DJ Shanghai down 0.84, Hang Seng down 1.32. And the Taiwan weighted down 1.19. So lots of red across the Asian markets, green in Europe, and mixed here domestically. All right, so those are our markets for today. Let's get to the market recap. S&P 500 falls as weaker consumer confidence data stoke further economic worries. All right, Astros won their preseason game today. Woohoo! Or spring training, whatever you want to call it. It's always exciting. Let me bring up my notes here and we'll jump into this. All right. The S&P fell for the second consecutive day on Tuesday as a sharp drop in consumer confidence added to economic concerns just ahead of NVIDIA's earnings report on Wednesday. The Conference Board's Consumer Confidence Index fell to 98.3 in February from 105.3 in January, marking the steepest decline since August of 21. The drop reflects growing worries among American households over inflation and the economic impact of tariffs. Economists had expected a reading of 102.7, making this a larger than anticipated slump. The weak sentiment follows disappointing retail sales and Michigan consumer sentiment data, fueling concerns that consumer spending, the backbone of the U.S. economy, could weaken further. In response, Treasury yields moved lower. NVIDIA fell over 1%, extending losses from the previous session after reports surfaced that the White House is looking to tighten chip export restrictions to China. The ongoing slide comes as investors await NVIDIA's quarterly earnings on Wednesday and a key test for the AI boom. Tesla dropped 8%, bringing its market cap down below $1 trillion, following a 45% decline in European sales. Hims & Hers plummeted 21% after warning that it may halt sales of its weight loss drug produced by Novo Nordisk. And Zoom Communications tumbled 9% after providing disappointing revenue guidance for the first quarter and full year. However, Wedbush analysts called the weak outlook a temporary setback, saying Zoom remains well-positioned for future growth. And finishing up here on a positive note, Home Depot surged 4% after posting better than expected fourth quarter earnings, with comparable sales turning positive for the first time in 2 years. All right, so good and bad. Moving on, article here from Zero Hedge. Conference Board consumer confidence collapses as inflation fears soar. All right. The Conference Board's consumer confidence survey fell sharply in February, dropping from 105.3 to 98.3. below expectations of 102.5 and marking the lowest level since June of 24. This follows a similar decline of the University of Michigan Sentiment Survey, indicating growing economic concerns among American households. A key measure of expectations for the next 6 months saw its steepest decline in 3.5 years, while perceptions of current conditions also weakened. Consumers are becoming more pessimistic about future business conditions and job prospects, with employment concerns reaching a 10-month high. Inflation worries surged with 12-month inflation expectations dropping from 5.2 to 6%, reflecting concerns over sticky inflation, rising household staple costs, and the impact of tariffs. References to trade policies and tariffs reached their highest level since 2019, suggesting growing unease over economic policy shifts. Additionally, recession fears hit a 9-month high, and optimism about the stock market declined. Only 46.8% of consumers expect the stock market to rise in the next year, down from 54.2% in January. The continued deterioration in confidence could signal a weaker consumer spending, a key driver of the U.S. economy. So that's awesome news. All righty. Got another article here from Zero Hedge. Estimates by analysts have gone parabolic. What are they talking about? All right. S&P Global's 2026 earnings estimates have surged, reflecting Wall Street's ongoing bullishness, but analysts may be overestimating growth. Historically, corporate earnings track GDP growth, which typically expands at a 6% peak-to-peak rate. However, 2026 estimates of $289 per share far exceed the long-term trend of $195 per share, creating a significant deviation that may not be sustainable. Analysts often inflate earnings estimates to justify high market valuations, but economic fundamentals tell a different story. Earnings growth relies on economic activity, and current headwinds, including tariffs, declining government spending, and weakening employment, could limit economic expansion and force downward earnings revisions. One key factor propping up stock prices is corporate share buybacks. Buybacks artificially boost earnings per share by reducing the number of outstanding shares, accounting for nearly 40% of market gains since 2000. Companies often repurchase shares when prices are high, prioritizing short-term gains for executives rather than long-term business reinvestment. While buybacks are expected to exceed $1 trillion this year in 2025, a market downturn or economic slowdown could disrupt this trend, increasing volatility. Investors should monitor buyback trends, economic indicators, and corporate earnings revisions while considering hedging strategies and holding cash to navigate potential risks. In short, Wall Street's rosy projections may not hold up, and investors should stay cautious amid rising economic uncertainty. Yep, be careful out there, folks. There's lots of landmines. All right, one last article from Yahoo Finance has to do with the tax bill or spending bill or whatever, the budget that's going through Congress right now. This article is titled Unforgiving Math Has Republicans Asking for Prayer as They Try to Move Forward on Tax Cuts. This was written by Ben Werschel of the Washington Correspondent. All right, so let's see what he has to say. He doesn't sound very positive on Mr. Trump's goals. House Republicans are pushing a budget resolution this week to support Donald Trump's one big beautiful bill, and that's in quotes, on tax cuts. But fiscal constraints and internal GOP divisions threaten the effort. House Speaker Mike Johnson faces pressure from both deficit hawks and moderates, making it difficult to reconcile spending cuts with Trump's 17 proposed tax reductions. The challenge is budget math. Trump's tax proposals could add 10 to 18 trillion to the deficit over the next decade, while Republicans have only $4.5 trillion available for tax cuts alongside $1.5 trillion in spending reductions. Even the extension of the 2017 Tax Cuts and Jobs Act alone could cost up to $4.8 trillion, leaving little room for other proposals like lowering corporate tax rates for domestic production, eliminating taxes on tips and overtime, and expanding child tax credits. The proposed budget cuts, including an $880 billion reduction to Medicaid, are proving politically unpopular, risking GOP votes from moderates in swing districts. That's a year and a half away. Democrats are united against the bill, shocking, calling it a giveaway to the wealthy. So giving away my tax dollars and printing money to give away to everyone else is okay, but if it helps someone who has a moderate amount of wealth, that's bad. All right. With Medicaid cuts threatening healthcare access for millions, a major tax and major tax provisions expiring at the year end, Republicans face intense political and market uncertainty as they attempt to deliver on campaign promises while managing the $36 trillion federal debt. Well, if you were to cut half of the federal employees, stop all the wasteful spending, only spend money on things that are constant that the federal government has the jurisdiction constitutionally for, getting rid of, Department of Ed, EPA, all that other nonsense, just keeping the Army and the Navy, I guess you keep the Air Force and, obviously the Marine Corps because they're part of the Navy. And I keep the Coast Guard too. They actually do some good stuff for the American people. They actually pull you out of the water when your boat sinks, stuff like that. Our Navy and, they don't do nothing for the American people other than just spend our money on conflicts abroad. So anyways, all right. Well, that's everything that I have to cover for today. DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a buzz. I'd be happy to help. All right. Well, hope everyone out there has a wonderful evening, and I'll talk to everyone again next time. Adios.